Hey, welcome. For so many of us, investing feels like this exclusive club with a secret handshake. But what if I told you that handshake is actually super simple? Well, today, we're going to kick down the door and show you a really clear path forward.
And this, right here, is the absolute heart of it. So many people get burned chasing hot tips they heard from a buddy or some guru on social media. But that's not investing, it's just gambling. Real, long-term success, it's got nothing to do with luck. It's all about having a solid plan.
Exactly. A good plan transforms pure chance into intentional, strategic growth. I mean, it's the difference between just tossing a handful of seeds into the wind and hoping something grows versus actually cultivating a garden, where you know what you're planting, why you're planting it, and exactly how to help it thrive. And that is the million-dollar question, isn't it? Stocks, bonds, crypto, real estate. The noise is just deafening. It's so easy to feel completely lost. But that's exactly why we're here, to hand you a map. Okay, so let's jump in. First things first, we're going to cut through all that noise and build a really simple, solid foundation from the ground up. No complicated jargon, I promise. Just a clear, step-by-step plan. And here's the best part. You don't need some advanced degree in finance to do this. You just need a reliable checklist. We can take all of that overwhelming complexity and boil it down to 5 simple questions that you can ask about any investment that ever comes your way. So here it is. We call it the FLIR checklist. That's F-L-I-R. Seriously, think of this as your investment compass. No matter what shiny new thing pops up tomorrow, you can always pull this out to find your true north and make a smart call. Let's see what it's all about. Okay, so let's break this down real quick. First, F is for fees. What are the hidden costs that are going to eat away at your money? L is for liquidity. How fast can you actually get your cash back if you need it tomorrow? I stands for imposition, but just think tax. How much of your profit do you actually get to keep? And then the 2 big R's. R for return, what's the upside? And R for risk, what's the potential downside? Every single investment out there is just a different balance of these 5 things. Awesome. So now that we've got our FLIR compass, let's actually look at the map. Generally speaking, there are 5 main territories where you can invest your money. First up, stocks. Pretty simple idea. When you buy a stock, you're buying a tiny slice of a company. You become a part owner of something like Apple or LVMH. So as that company gets bigger and more profitable, your little slice gets more valuable. This is why stocks are the main engine for long-term growth. But it also means their value can swing up and down. Next, we've got bonds. Now, think of a bond as just an IOU. You're basically loaning money to a government or a big company, and in return, they promise to pay you back with interest. Because they're basically just loans, they're way more stable than stocks, which makes them a fantastic tool for adding some stability to the whole mix. Then there are commodities. This is the raw stuff that makes the world go round. We're talking gold, silver, oil. What's really cool about them is their prices often move in the opposite direction of the stock market. So when stocks are having a bad day, commodities might be up, which makes them a great way to diversify and protect against things like inflation. Fourth on the list is real estate. Now, this could be a physical house you rent out, or you can invest in huge property portfolios through special funds. It's a real, tangible asset. You can literally see and touch it. The only trade-off is that it's not as easy to sell quickly, right? It's less liquid than a stock. And finally, number 5, crypto. Digital assets like Bitcoin are definitely the new kids on the block. The potential for reward here can be absolutely insane. But, and this is a huge but, it comes with massive risk and wild price swings. This is the kind of thing you reserve for the purely speculative slice of your plan. Okay, and this is where it all clicks into place. We can use our FLIR checklist to map out this whole investment universe. Just look at the return and risk rows for a second. See how stocks and crypto are way over on the very high end for both? And now look at bonds, low, moderate for both. This grid is just a fantastic way to see that fundamental trade-off between risk and reward for everything we've talked about.
All right, so you've got the framework, and you know the main types of investments. But how in the world do you actually buy all these different things easily? Well, let me introduce you to what I think is the single best tool for a beginner. It's the smart shortcut.
This quote from John Bogle, the guy who founded Vanguard, just nails it. Instead of spending your life trying to find that one single needle, that one magic stock that's going to make you rich, why not just buy the whole haystack? And that is exactly what an ETF or exchange-traded fund lets you do. The shopping cart analogy here is perfect. Instead of spending hours running up and down every single aisle of the stock market trying to pick out hundreds of different things, an ETF lets you just grab one pre-filled cart that already has a little bit of everything inside. And this comparison just lays it all out.
With one ETF, you get instant diversification, which automatically lowers your risk. It takes almost no effort, and the costs are incredibly low. For anyone starting out, it is an absolute game changer. It puts the power of a professional portfolio right in your hands.
Okay, it is time to put it all together. We've got our FLIR compass, we know the main asset classes, and we have our vehicle, the ETF. So let's see what a real plan using all these tools might actually look like.
Now, I have to say, this is super important. There are basically endless ways to build a portfolio. So what we're about to look at is just an example. It's a classic structure to help you get the main idea. It is definitely not a one-size-fits-all recommendation. So what you're seeing here is all about balance. This portfolio isn't betting the farm on just one thing. Look at the chart. It's got a big piece of world stocks for growth, sure, but that's balanced out by a huge chunk of stable bonds. Then it sprinkles in some gold and real estate for diversification and a little slice for higher growth emerging markets. Every single piece in here has a specific job to do. Okay, let me be crystal clear about this. What we just saw is a model, not a prescription. The perfect portfolio for a 25-year-old is going to look totally different from one for a 65-year-old. Your personal goals and really your own comfort level with risk are the only things that truly matter. At the end of the day, the best investment plan on earth is the one that you can actually stick with. And that really is the last and most important question. There is no such thing as the perfect portfolio. But now, you've got the tools. You have your FLRR checklist, you have the map of the asset universe, and you have the power of ETFs to start designing the one plan that is absolutely perfect for you. So, go build it.